Hi, everyone. Mike White here. Welcome to this week's blog post. Well, just like we spoke about last week, the markets are digesting all the election results and forming opinions on exactly what everything means. And at the same time, nominees are being announced, and people and the markets have to start digesting what the possibility of what things are going to look like in the future based upon certain people and personalities uh, taking certain positions within inside the government, or at least what they perceive that those nominees, once confirmed, and again, let's not leave out the confirmation process, but once they're confirmed, what direction is that person going to help navigate that department? What is that department going to look like? Is that department going to exist 6 months or 6 years from now? There's a lot of moving parts. The good news is most of the election results are in. We've got a pretty clear look, or clearly defined government, or the Republicans are going to control all three houses, all three areas of government, or all three branches of government. Um, and things are going to move quickly over the next few weeks, and we'll see. But for us, the volatility remains, and it's something that we talked about. And so you do that, and you have to be aware that some of these things could be wild overreactions to information. They could be misperceptions of reality. Some of the things that are leaked out may not even be truthful at that point in time. So we have to be careful. We have to be prepared. We have to be vigilant. And oh yeah, by the way, last week Fed cut the discount rate by 25 basis points, and yesterday we had a CPI number that, while pretty much in line with what they projected things to be, still shows that inflation is being stubborn. It's not roaring back or anything like that, but it's still not moving as quickly in some areas as the markets would like, and as the Fed looks at it, based upon the interview last week with Jerome Powell. He seems to be of a mindset that he's going to march the Fed funds rate lower in the months to come, and the markets are going to react to that information as they do. But unfortunately, and as we've talked about before, it's not, long-term rates in the bond market are not going to go lower overnight. They're going to trickle, and we're going to see continued volatility likely through the first of the year and into the new administration. And we all know, historically, the first 100 days of any administration is when the biggest uh, policy changes, the biggest legislative moves, all those things are tried to accomplish in those first 100 days. And the reaction, so pay attention to the fact that that's out there. Finally, I just want you guys to pay attention to the fact that we've got about 30 days left to bring in transactions that are going to close in 2024. And you really need to be looking at your pipelines. You need to be looking at your people who you've pre-approved or people you've been in contact with. The reality of the situation is we're looking at a market that, is also trying to digest this information, but the need for people and the desire for people to buy houses or to trade one house for another house and move is still there. And I think it's really important that we remember this, with the caveat that pay attention to the housing information, because there's a lot of information that's out there that I think doesn't take into account a very important factor. And it's one thing I think is overlooked. And I've actually heard some people talking about this without recognizing the fact that less than a couple of months ago, we had two major hurricanes that ravaged parts of Florida, Georgia, and North Carolina. Millions upon millions of people were impacted by this, billions and billions of dollars of damage. people temporarily or permanently going to be unemployed or impacted. There's a lot of things that are going on in the marketplace, and people are bypassing that data to understand that those two hurricanes disrupted a large, swath of the country, and the reaction to that is still ongoing, and you have to, you know, keep that as a thing in your head when you see, you know, these numbers where people are shocked, the cost of housing may have jumped or spiked a little higher or what have you. Well, the reality of it is there were literally thousands of houses that were impacted, that either are damaged and uninhabitable at the moment or disappeared completely, and have to be rebuilt. And the pressure on the people who used to live in them to go someplace else is going to put a temporary strain on the housing market. And I think some of that has to be digested as well. And we have to step back and we have to look at it. So clearly, there's a lot to take in this week. We got PPI data this morning. We got obviously initial and continuing claims again this morning. And we've got retail sales numbers tomorrow that we have to pay attention to. So there's a lot going on. And if you need any help, either navigating the last 30 days of your production cycle or just putting the final touches on your business plan, as always, it's Mike at imtcoaching.com, and we'll talk to you again next week. Take care.